Hi, Jonathan York Bay Financial Partners, looking at investment markets. Some interesting data coming out of the US on the employment side, looking for around a sort of 170 to 180,000 jobs to be created, came in at 272,000. Now that's obviously a pretty big jump in May, and sort of goes counter to the sort of previous months where the employment data was starting to fall a little bit, taking some of the pressure out of the jobs market. Earnings was also a little bit stronger, coming in at plus 0.4 and 4% for a year on year. That was versus expectations of sort of plus 0.3 and 3.9. So with the Fed meeting this week, that maybe throws a little bit of a spanner in the works because, previously inflation had been sort of falling, and certainly with the heat coming out of the labour market, there was some sort of expectations that the Fed may be looking to cut interest rates towards sort of September, October of this year. However, with this stronger data now, and the US economy is still in pretty good shape, but growth is still running at a reasonable sort of level. Potentially that just pushes back the potential sort of cut from the Fed to maybe sort of November or December this year. Now that's obviously a pretty major turnaround because as sort of stated before, at the start of the year, the market was looking for sort of 4 to 5 cuts at least. We're now pricing in maybe sort of one, if we're lucky, just before year end. Now, interestingly, obviously, interest rates did pop a little bit on the back of those numbers, but not getting carried away too much. 10 years back to 439, and then 2-year 483. Now again, sort of 2 to 3 weeks ago, they were trading well above sort of 4.5% and 5% respectively. Now Apple have just had their big marketing event, sort of announcement on their sort of AI progression going forward. Although in typical sort of Apple style, they haven't called it AI, they've called it Apple Intelligence. But that's certainly given the shares another little boost, and that's obviously helped the Nasdaq as well. So really going to be very interesting to see what comes out of the Fed meeting this week. Potentially no one's looking for any sort of rate cuts, but it'd just be more interesting to see what commentary accompanies the sort of statement of unchanged rates. And any sort of idea in terms of the sort of dot plot on when interest rates may be cut. Because potentially, if we're looking at sort of November, December of this year, the Fed could be playing a little bit of catch up with the ECB and the Reserve Bank of Canada, who have already cut rates. Now, oil's had a little bit of a pop as well after trading close to sort of 75 bucks. That's popped a couple of bucks a barrel there on the back of a investment bank report that potentially looks at some maybe shortages coming forward over the next sort of 2 to 3 months as we hit the big driving season in the US. So oil currently trading just below 78 bucks a barrel. Now the Gaza situation remains very complex out there. Israel under really increased pressure to try and come up with some sort of ceasefire and cease military operations. Although the right-wing members of the coalition government there are giving Netanyahu really quite a bit of hassle as well to completely crush Hamas. The problem is for Israel is that every time they see a military operation sort of being conducted, there are more and more civilian casualties. Now in the UK, getting very messy with the election. It's still just over a month away. The ruling Conservative government is still struggling in the polls, and they said that hasn't been helped by the Reform Party coming forward and sort of splitting that sort of centre-right sort of voting bloc. And potentially for any sort of rate cut coming forward from the Bank of England, appears to be sort of diminishing, because the economy, while is sort of struggling out there, you're starting to see a little bit of rise in unemployment, but also as well sort of wages are pushing up just a fraction. But then potentially the Bank of England could be swayed by the ECB that say have already cut interest rates. Now, latest GDP data out of Australia was a little bit sort of muted, only a plus 0.1 increase, which gave a year-on-year 1.1 growth rate for the March quarter. Although there was an increase in the December quarter, that was revised up to 1.6. Now, here in New Zealand, after the budget, which was pretty much as expected, there wasn't a whole lot of money to give away out there. There was a small increase in the tax bands, which was sort of long overdue. But again, with the Reserve Bank of New Zealand, it's quite interesting. Obviously, after the rate cut in the ECB and Canada, New Zealand inflation is still running well above sort of 4%, which is arguably sort of double what the Reserve Bank is trying to target, around their sort of 2% target. But then if you look at the bigger picture, the economy really could do with some sort of help out there, and a little bit of a boost by rate cut. Because certainly the increases were pretty severe, going from plus 0.25 to 5.5% pretty much every meeting over the course of sort of 18 months. And while there haven't been any rate increases for just around a year now, the economy is certainly hurting from those higher rates. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.